Think your executive director bears sole responsibility for finances and compliance at your nonprofit? Think again. Board members and other personnel can also be held accountable, or even sued to recover funds, if you have prohibited transactions or reporting requirements that aren't met. So everyone in leadership at your nonprofit should understand how the organization operates and spends its money. A great way to do this is to pay special attention to key areas of your nonprofit's Form 990. In addition to showing the public how you spend your money, it demonstrates to the IRS that you're following the rules for tax-exempt organizations. Accessing your 990 is easy. It should be reviewed by the board every year, and it's generally presented along your audited financial statements. You can also look up current and past forms online to compare your nonprofit's numbers through the years. While it's best to understand the entire form, it's over 12 pages long. So to keep it brief, here are the sections most likely to cause compliance issues or trigger an audit if not completed properly. The compensation section. The IRS wants to make sure the pay and benefits you offer are reasonable. Unfortunately, they don't define reasonable, but you can gauge this by comparing your compensation to what other nonprofits offer for similar jobs. They also look for compensation from related organizations. For example, you're a social services entity, but someone working for you is paid by a foundation that helps fund you. While related compensation in itself is not a bad thing to have, you're required to disclose it when it happens, and you can't use it to hide excessive compensation. Excess benefit transactions and disqualified persons. If a person of influence at your organization, like an officer, director, or key employee, benefits from an economic transaction with you, it needs to be reported. Note that this is one of the top triggers for an IRS audit, so make sure such a transaction is reflected accurately and completely on the appropriate schedule of your 990. Unrelated business income. On the first page of your 990, there's a place to report income from activities that are not related to your mission. For example, you rent out your facility to another organization, or you sell items at a gift shop. If you see a zero on that line and you know that you've engaged in such an activity, you need to get that fixed. By the way, you also need to complete the Form 990T for this income, and you could be subject to taxes on it. So when your financials are being presented, pay attention to when they review your Form 990. By being familiar with the information it contains, you're more likely to notice signs of financial issues or non-compliance. That, in turn, protects your organization and you.
Thanks for watching Kickin' It with Corinne. To learn more about our nonprofit accounting and business consulting services and watch new episodes when they're released, visit jmco.com/KWC. And don't forget to hit subscribe on our YouTube channel for the latest from James Moore.